is yeah, so it's recording as of now. Whenever you're ready, you just let me know, and maybe you want to get up. I don't know if you want to talk about the S&P first. You want to get the
yeah, I'm going to talk about the VIX first, just to give the level of the volatility we've seen over the last while. So I'll go into that and then go into the S&P.
Perfect.
I'll start the S&P first, whatever is easier for you. Probably
no,
easier.
No. You start with the VIX. Start with the VIX. That's okay, because it
just for something different. Yeah.
Okay.
Good morning, everybody. This is Brian Noble from TraderNoble.com with your weekly analysis of the US indices and the euro dollar. It's been quite some weeks since we had the election last Tuesday, with Joe Biden finally being announced president on Saturday, even though at this stage Trump has still not conceded the election, which, of course, as we know from the past 4 years, that is no surprise. The volatility in the market over the last 10 days has been absolutely insane. And the first screen I want to show you today is the VIX. The VIX spiked to a high of 41 last Thursday when the Dow hit a low of 26,100. And a combination of an election result with Biden, and which is going to bring calmness to the US, certainly from the overseas point of view, and the vaccine news from Pfizer has certainly rocked the markets, and we've seen the VIX collapse from a high of 41 down to just over 22 on Monday, when the S&P rallied an incredible 160 points pre-opening. And as you can see, this move in the VIX we're now below the 200-day moving average at 31.86 and the 50-day moving average at 28.66. So there's no reason why this VIX can't go down and test the old August lows and head back into the teens, which we traded for the first 6 weeks of 2020 before the virus hit and the markets got roiled. So you can see by the movement of the VIX, is one of the most important charts that I watch every day, is to see what the option traders are doing, because it certainly gives you an update or an edge, certainly on the S&P and the Dow. And as we can see here on the S&P, we in September the 3rd, we hit a high of 35.50. We went all the way down to 32.05 in late September. Tested it again last Thursday and then just rocketed. And once we broke above the previous high of 35.30, then we went to new highs and up to an incredible 36.67 in the December contract pre-opening on Monday. Phenomenal move. It just shows you, when you got the Fed putting so much money into the economy, combination of the vaccine, that everyone's still stuck at home, wants to get back to having their normal lives again. People just went for it. And I think as long as the S&P does not break back below 3,500, then it's going to be a buy on dips. Obviously, given the volatility, you've got to trade in smaller size with wider stops. Personally, I prefer a closing stop, because so many times you can have a stop on the market and then the S&P or the Dow or the Nasdaq will reverse into the close. And that's why the closing stop is so important. As you can see, this move higher, we're well above the 50 and 200-day moving averages for the S&P. So as long as 3,500 holds, I think there's a fair chance we're going to go back up and test Monday's high at 36.67. Moving on to the Dow, which has been the strongest of the markets over the past 10 days. As you can see here, when the Dow got down below 26,100 and boom, just up to 30,000 in the pre-opening on Monday. Consolidated a bit back and tested 29,000 yesterday, but as you can see today in the grey market, we're trading around 29,600. So another 200 points up from where we closed last night. Again, I think the Dow, as long as we can hold this sort of 28,800 to 29,000, then we're going to go back and test the 30,000. We've good support at the old previous high of 29,200. So I think as long as we can hold that sort of 28.8 to 29.2, there's no reason why we can't go to 30,000 and beyond. Against that, technology has been the main benefit of the lockdown, and the Nasdaq has certainly got hit over the last few days. It fell just shy of its all-time high on Monday morning when the US markets opened, and got hit quite hard, falling from a high of 12,400 down to 11,500 yesterday. So, you know, we got to keep an eye on that. As long as the 50-day moving average at 11,500 holds, then I think the Nasdaq will, despite the doom and gloom, the technology is over and they're overvalued. I still think technology will resurrect itself again. And I think we'll go back up and test the 12,000 area over the coming days. So certainly wouldn't be getting bearish here unless we close below the 50-day moving average, 11,500. And finally, I just want to talk about the euro, which hasn't really done an awful lot. Over the past, as you can see, it's kind of trading in a narrow 300-point range for basically the last 3 months. So it's been very, very quiet. We did spike to 120 back in early September, but against that, it's mainly just be trading between 117.50 and 119 on the top side, with 118 the fair value. We're trading around the 50-day moving average this morning of 115.70. So, you know, it's been going up and down through this level. I think if the euro does decide to trade lower, I think it's very good support here at 116 figure 50. So I think I'll be a very strong buyer in the 116, even to 116.50 area. Against that, if we do manage to trade back up to 120 again, I'd be a small seller against the previous high, looking for a reversion back to the 50-day moving average. Thank you very much.